Hello, everybody. I am delighted to have a couple of unique things happen today for the first time ever. So I've got two brothers in the channel. I've got Jason and Michael Buzzino. I know you guys know them both. And this will be interesting to find the dynamic between brothers and styles and what they like and what they don't like, if they're aligned or not. And second of all, we got people from all over the world at the same time. We got somebody in Australia, somebody in Greece, and of course, myself on the West Coast of the United States. So scheduling time zones was extremely difficult, but thank you guys for being here. And if anybody has a question, where's Ben, where's Rob? Well, scheduling got in the way. But having these guys on is a huge honor and pleasure. And also, as we jump through, those details below where you can subscribe to their channels. So how are you guys doing today?
Amazingly well. Amazingly well. I'm in Greece. It's nice and warm. I can't complain about anything else. It's absolutely beautiful over here. So, yeah, I won't rub it in anymore.
And the food is good.
The food, can't complain over this side of the world either.
Good. Excellent. Just for everybody to know who is not aware of both Jason and Michael's channels, the links are below, and also follow them on Twitter. It's always a fun time. So let's jump in. And as usual, everything we discuss on this channel is for edutainment purposes only, never financial advice. And there will be a difference of opinion here, I'm pretty sure. But if you guys, before we jump into the really fun stuff, I'm going to start it off with a little bit of a rattler. Do you want to tell us 30 seconds about yourselves each for the audience who may not be familiar with you both? Start with you, Michael.
Michael, you go first.
Okay. Pretty much been interested in the financial markets from as young as I can remember, but I did do my qualification as an electrician, simultaneously learning how to trade as I was doing my trade, and then transition from being a sparky into trading full time. And pretty much from there, just continued to learn about trading, finance, the economy, and a lot to do with trading psychology, that kind of side of things as well, because it's very important. And just continued to grow and go into my little cave and did that for about 10 years before Jason got me onto the stage of YouTube, which has been a lot of fun. So
good.
That's pretty much me.
We'll dig more into that later, your trading styles and how you managed to switch career, because a lot of people are looking to do that right now. Jason, 30 seconds about yourself for the audience who doesn't already know you.
Doesn't already know me. I mean, I started with real estate. That's where I really wanted to hammer home and try to be financially free on real estate. So I managed to get through a couple of different cycles, getting the feel of the fear and the greed. Michael actually got me into trading. It was through a seminar of a company here in Australia. And so that's when I was switching careers as well, from self-employed to personal training, so self-employed again. And then I just started to learn how to trade. And so, Michael and I went on that journey together. Michael's very strict in the way he does things, and he kept pursuing that while I went into property development and had trading on the side, and then also brought those two back in. And then, of course, I just love community and talking to people, so I got onto YouTube and started talking more about investing, because I find it is one of the only careers you can do that you have to improve. It's all up to you, and if you do well, you get financially rewarded for it. So it was just very, very appealing. So that's what led me to where I am today, continuing to invest full time, trade and invest.
Beautiful. You mentioned one thing that's very important as well to the audience is the D word, but I refer to the double Ds, and that is discipline and dedication. Without those two, you will not be successful. Do you guys agree with that point?
Yes.
Yeah, 100%.
Very simply, yes.
You have to basically be all in with this line of work, I think.
Good. Well, let's jump to the first question, okay? Because this is what everybody is grappling with. And Raul Paul, who has been on this channel a few times, he phrased it beautifully. And I think Ran had Raul on his channel this morning as well. But he said, this is the most hated rally. This appears to be one of the most hated rallies I've seen in quite a few years in equities. And the reason for that is people didn't see it coming. People expected to get a lot worse before it got better. But this rally came out of nowhere 6 weeks ago and caught a lot of people off guard. So a lot of people are upset. The people who weren't on the bus, on the train, are very upset. Where do you guys see the market right now? Do you believe it is the most hated rally? Have you guys deployed? Are you still waiting for more downturn? We'll start with you, Jason, first. Because last time we were on together here, you believed we were going down again a little bit, or maybe a sideways chop. I can't remember exactly.
can't remember exactly when I was on. I remember the time before that, we ended up going down. So we had that drop straight after. That was the one that I was on when Ram was longing Solana before it dumped to about 50%. Sorry to bring that up again, Ram. But he gave away his kids for that trade, I think. S&P, we were expecting it after the June low that we were going to see a rally. It's something that we've talked about a lot with our members, the rally. But I think what gets a little bit confused is we're still expecting the market to come back and retest somewhere around those previous lows. And so I think people maybe get that confused with saying, no, it had to go down further. But we always need a bounce before we get a retest of previous support levels. This particular rally, though, I've talked about publicly on the channel just a few days ago, we finally broke out and had an overbalance in price. So we have bounced harder than any time in this entire bear market from the peak in January, talking about equities. And so this is a good bullish signal. That doesn't mean that we won't come back down once the emotion dies off a little bit to come back and retest 3,600, 3,900 on the S&P. And that's what I'm talking about when it comes to a retest. I don't think time is up yet for us just to shoot to new all-time highs. And in terms of price, if time's not up, then price has to come back down. I don't know if we'll break the low, but I think we need to come back and test that zone of 36 to 3,900 on the S&P. And that will then translate over to Bitcoin, Ethereum, whatever their low period is. Say for Bitcoin, it's 17,000 up to 22-ish thousand. Once everyone sort of dies off with that energy, we start to fade out again and come back and test to see where the real support comes in. And that's one of the final last tests. That's what I'm looking for.
Good. How about you, Michael? Where do you see us going?
Yeah, I think in terms of the most hated rally, I think that's an interesting one. Hadn't heard it put that way, but come to think about it, I do remember I put a video out 2 days after the low, the 20th of June, saying that talking about a macro low, because from that point been quite bullish. And it seemed like everyone on a dime, at least in the comments on Twitter, turned into a macroeconomist saying you're a fool, the market has to go lower. That's kind of a signal in itself that people are pretty upset. Like I guess the general masses, and that's usually a good sign for the market to put in a low. So being really bullish since mid-June, we've been posting to the members about some purchases we made. For me, also in the stock market, Jason crypto, myself crypto as well. And like Jason said, I think it does get a little bit confusing, get called the eternal bear, just because I haven't ruled out the chance, I think Jason's the same boat, obviously, that there is still a chance, in my opinion, of another 30 to 50% drop from wherever this top does come in. But in terms of price, if we do see a 30 to 50% drop from this next intermediate top, it's probably going to be around where the current low is. Maybe it goes a little bit lower, a little bit higher, but all things considered, been very, very bullish since around mid-June.
Excellent. Well, that was a nice point of view. We did talk about the stock market. We'll come back to the stock market towards the end, but everybody wants to hear about Bitcoin right now. So I'm going to show you a little Bitcoin chart. And there's a couple of things to note here. Obviously, beautiful picture perfect descending channel. We had the bottom and it's just been ranging up all the time, constant accumulation. People argue, well, we don't know if it's just a fake out or if it's for real. But to me, it has been pretty impressive. We are up 40% in 55 days approximately from the bottom, which is a big move. And a lot of people are out there and they're very frustrated because they're waiting for the FinTwit 12K type of number to hit before they deploy. And now they're getting very anxious. And this is probably why Raul referred to it as the most hated rally, because people are like, oh, please come down, come back to me. Let me get back on the screen. So are you guys seeing that sentiment right now? And where do you see the Bitcoin chart going from here, especially in light of a lot of the news lately, which we'll talk about in a minute too? Michael.
Me? Yeah. Yep. I've been fishing for some kind of intermediate top lately over the last couple of weeks, but I mean, the bigger picture is still pointing up. We're still getting our higher lows. It hasn't broken down. So I wouldn't be surprised to see a bit of a FOMO rally where we do kind of peak out a quick run, maybe lasting 1 to 2 weeks. If we do start to see a bit of, short-term capitulation to the upside, I think that'd be a good signal for an intermediate top. But at least for now, as long as the lows are holding on the chart, there's no point fighting that intermediate picture of the rising lows. It's not going to be until we get a breakdown of first around that 21, 22K, before I'm starting to think that maybe we're getting a bigger picture correction. So it is really just going with the chart, in my opinion, and it's still pointing up and holding around 24K at the moment.
Good. Jason, how about you?
Yeah.
You get any readings from this chart right now?
Not too much from this chart, but what you said earlier about the most hated and where we currently sit in the market all kind of reminds me a little bit of the drop in early 2019 when we tanked from 2018 into that final low, and things started to creep away, and people were like, no, it's got to come back. It was climbing up to 3,800, 3,900, and it was like, it has to come back, and then all of a sudden it shoots up to $5,000, and then everyone starts to FOMO in, and it just snowballs into 14,000, and all of a sudden a few months ago we're at 3. So like Michael was just saying, if we get those couple of weeks on where this thing runs up to 28K or 30K, that's going to sucker in that last lot of people. You'll probably see the traders, the institutions, the smart money selling at that point, to then watch where this thing corrects back down to, and then see whether it's a higher low strength or if it starts to trend a little bit lower again. But in terms of that sideways up, maybe we do get the breakout, but that's kind of like that end point, I think, for that next few weeks of, do we get that FOMO pump?
So let's look at a couple of technical indicators. It's just a little screenshot here. I thought it was kind of fun, and I know you guys look at a lot of technical indicators as well. But from TradingView, all the oscillators are pointing to a buy. Moving averages, overall summary is extremely positive. Are there any favorite technical indicators you look at, like the 200-week moving average? You look at the money flows. You look at the whale accumulations when it comes to Bitcoin.
Yeah. I don't want to shill too many of our own things on here, James. We've talked about our members and whatnot. We look at a swing chart. That's a very big key indicator. And our 50%, which is all a 50% tools in TradingView. But basically, we're just looking at where the market balances out. And you often see kind of like a magnet. The market will then find this balancing point between the high and the low of the range.
Yeah, awesome. How about you, Michael?
Yeah, much the same. Just Gann style analysis, looking at the trends. Pointed out on YouTube mid-July that the macro or the weekly trend did technically turn up mid-July. It is still a grinding uptrend, but the trend is still up, technically speaking. So that's probably the most simple and my go-to indicator, and that's just based on the rising lows and prices going up. I mean, you can't fight the price at the end of the day. And on the weekly chart, the macro trend is still pointing up. So that's kind of what I'm going with.
Good. I spend a lot of my time looking at money flow and accumulation. And as you mentioned, Jason, a minute ago, what the smart money does. We had big news last week, big news this week. We have tons of other news that kind of missed the radar. Like, I think BlackRock also invested about $200 million in Circle, which means they are behind stablecoins. And I don't know if you guys know, but people like Jerome Powell calls Larry Fink more than he calls his own team members, which is kind of funny. So it just shows you how important this whole BlackRock news is, the work that Schwab is doing, the work that Fidelity's been doing since 2014. You got this news today about Pier 72 setting up a dedicated fund. Morgan Stanley are going in hard. These logos alone here represent, by my rough calculation, nearly $30 trillion in money. So And I did some analysis as well since the beginning of the year, tried to identify exactly who is accumulating Bitcoin since kind of the downturn. And I calculated about 80 to 82% of the money flow is in those with more than 1,000 Bitcoin or more. Only about 18% is retail. What do you guys think about the money flow and the news? And is Bitcoin becoming an institutional game? Because I know that retail, especially if you look at the Bitcoin dominance, they're degenerating straight into alts. So they're skipping Bitcoin, boomer coin altogether. Where do you guys see this whole thing play out? I'll start with you, Michael.
Yeah, sure. I mean, there's two, I guess, of many ways we could look at it in terms of the whole, centralization and Bitcoin fixing itself into the traditional markets. That's maybe a bit questionable. But in terms of the price of Bitcoin, adoption and awareness, and essentially looking at just making money out of it, I think it's very bullish. Obviously, more money is flowing into the space. It's going to be bullish for the space. And although it might not have felt like it at the time, I don't think we had the situation in 2021 when it was really an all-in type situation of institutions all in on Bitcoin crypto as well. Whereas now we do kind of have the perfect storm, or just basically perfection in terms of timing. The market's down. We've got this big inflow of institutional money, and at the end of the day, for the economy, it all comes back to the land. Money always just flows into the land. And now that we've got the traditional space into Bitcoin as well, and there's a lot more popping up in the space where we're going to be able to put Bitcoin up as security to buy property. I think everything is really just starting to feed back into the traditional market, and then we do get this bigger picture cycle top that we're looking at for later this decade. I think right now it's very bullish. I think it'd be pretty difficult to deny that. So I think we are gearing up for this all-in situation where institutions are in. We've got credit created against Bitcoin. I think it's just really a perfect storm.
Yeah, I agree with you. Jason, what's your point of view on this whole big money, smart money, massive institutions stepping into the cryptoverse?
I think we'll potentially see this resurface in the bull market, because if we saw the news of BlackRock coming in, like we saw, was it this week or last week, and they were getting Coinbase to be able to purchase crypto for their clients and that sort of thing, that would have went absolutely crazy in the bull market. But in the last week, Bitcoin's done next to nothing. Pumped up on that little bit of inflation data, CPI data, and then it's back down again. So I suspect we'll probably see that stuff resurface again, and it hasn't really been priced in completely just yet, like the understanding of it. But just to follow on from Michael's point, everything is really starting to come together for a perfect storm, for a big pump before things turn south. This is years out. That's what we're looking for. Multi-years. We understand from the previous cycle, like 2018, 2019, you remember all the stuff that was getting built, like all the payment gateways and the DeFi and different smart contract platforms. Everything was getting built in that bear market, and then they started to come out and people were like, oh, wow, look at all this news. It's so amazing. Everything is pumping. And it's like, well, yeah, that stuff's been talked about already, but now people are just finding out. And I think that's going to happen again, like it does every other cycle. Once the interest flows back, it'll be like, oh, BlackRock is invested here. Fidelity's invested there. Check out all this news. And it's kind of like old news, but it's a new crowd.
Yep, definitely a new crowd. And I do believe that 2017 to 2022, there's been a lot of radical change, especially with the players that are in the market. 2017 is mostly a retail game. Okay, let's switch gears and talk about something more fun. And I did hint at the fact that, if you look at Bitcoin dominance down at 41% or something, or even 40%, it is staggeringly low. After all that happened in the market, 2 months ago with the who's who of everybody kind of collapsing, cascading liquidations, you'd think people would move to safety. But they're not. they're still jumping into altcoins, and
still a lot of degens out there.
Yeah, and you see some names pop up 50%, 100% in a day, and many things are double off the bottom. So, what are your favorite altcoins? Where do you see this whole space going? Is there a category that you believe will survive and be a good long-term investment to have alongside maybe real estate, maybe Bitcoin? You guys decide who wants that prickly one first. I know, Jason.
I'll jump in.
Go.
I always come back to altcoins. I think we've had this conversation before, but altcoins are fantastic for trading, for more anything else, more Bitcoin, more Ethereum, more dollars to go and buy real estate, to go and buy something real. It's unfortunately the big problem with altcoins is the new people that come to the space believe that altcoins are the next Tesla or Amazon or Apple or name a tech stock, and they think that's what it's going to be. But when you're around long enough, you see it time and time and time again. The people who create these companies, most of them, unfortunately, are kind of just in it for the money. They can see what's coming. They have the blueprint. They create the token. They create the buzzwords. They create the buzz plan. They pump it out in marketing, and then it flows on. I know it's not what everyone wants to hear, and it gets a little bit, we might clash heads on that, but it's unfortunate. Every cycle you see it, 99% of them are gone. I like to trade them for more Bitcoin, more ETH, more stable coins, and then go and buy some real estate, something longer term, because I don't know which ones are going to be here years from now. And you could say, Cardano, Solana, this, that. I know Solana's a favorite of yours, but we honestly don't know at this stage. And the only thing I would look for is how are they faring against their Bitcoin value. So I always watch the pairings of an altcoin against the Bitcoin value, and that gives me, I would say, an early signal for the traditional investor, but a sort of medium signal for the degen investor who wants to try and buy these things before anyone's heard of them. So that's my signal. That's my game plan for altcoins. Which are the ones that I want to hold longer term? Watch the BTC pair.
And do you hold any now? Or did you buy
altcoins?
Dip?
No. Unless you consider Ethereum an altcoin, which I kind of don't anymore. No. So I just hold right now Bitcoin, Ethereum. I sold all my altcoins, the majority of them, as I mentioned to members. Must have been about January when it broke down, and then I had a tiny bit left, 3 to 5% of my portfolio, and I just got rid of them on the way down.
Cool.
So,
Michael, what about you? If somebody had to hold a gun to your head and say, you got to buy an altcoin, what would you buy? And do you hold it now? And how do you trade them?
Bitcoin and Ethereum. I think the best way to answer that is my favorite altcoin is whichever one has good liquidity. And I think we kind of obviously don't know exactly what you do, James, but we probably approach it in similar ways, but different in that the research I do, I'm really just looking at the chart, looking for long periods of accumulation, depending what time frame I'm looking on. If provided there's enough liquidity, I'm just going to be looking for those trades on the breakouts and just go on for the ride. I guess from different kind of background, I was never one to really stock pick and doing lots of research to try and pick the best stock. And being in crypto now, I'm not really doing the same thing in crypto. We're trying to find out all the best fundamental reasons about which one is going to be the best. It's just not my game. So yeah, really whatever's got good liquidity, and I'll just go on for some of the ride on whatever breaks out. I mean, Matic was a really good recent one that I spoke about on YouTube before it broke out, and it pumped, and they come along all the time. So I'm really just kind of always looking for the next one.
Exactly. And there's a lot of interesting things. So what I do is I don't look at Bitcoin pairs, I look at ETH pairs with alts and find out when they're completely at ridiculous valuations, where they're overbought or oversold. And that's how I play to it. And also I like to time the money flow between alts. So you can have something that has a good press release, or they may say, partnership with Disney, all that stuff that hit Matic. And that causes a lot of the flies to go over and invest. And sometimes when they're thinly traded, it can have a huge result, but then the liquidity doesn't last long, and then they move on to something else. So that is also very interesting to watch too as we go forward. Okay, it's funny, you did hint on equities and equity research. A lot of people want to know, do you guys own any equities, or is it purely real estate and crypto?
For me, it's an easy one, and I'll let Michael answer the rest of that. But for me, it's crypto. I use it as trading. I use it to make more money. And then I've got my businesses, and then I go and invest that into real estate. So it's basically my cash cow. My cash is trading and business, and that flows into real estate. I tend to keep things really, really simple in that regard.
Good. Michael, how about you? Do you dabble?
Yeah, much the same, but with the stock market, just ETFs. Just like I was saying before, I don't stock pick. ETFs are just my proxy to get exposure to the stock market, be it an Australian-based ETF mimicking the Australian market, or international shares. And then also I do a fair bit with property as well. And that for property is kind of my long-term, big picture investment. And yeah, stocks are just one part of that. And then obviously crypto as well, but not so much in the altcoin space.
So because what I did, something similar to what you guys did a long time ago, I used to make money in the markets, options trading, take it off the table, buy real estate, make money, take it off the table, buy real estate. And that's a very good, safe, long-term plan, because, your real estate isn't very likely to blow up or disappear, whereas other things can. So it's good to sock some aside. So that's good. So let's talk about trading styles as we jump in, because I know you guys do a lot of TA and everything else. So a lot of people are trying to figure out what is the optimal trading style, because different markets lend very well to different types of styles. I used to be a heavy, hardcore swing trader. That was my thing. 4-hour charts, trade in and out of position every 8 to 12 weeks, hedge, sell calls, sell puts, whatever the case may be. Now, in this very choppy, volatile market, scalping works very well. Sometimes intraday you can, pull quite a bit off the table, especially in crypto. You just got to wait for the timing. So where do you guys see yourselves fit here with crypto? And what would you recommend the audience do for this particular market condition?
Michael is the master at this, so yeah.
I've basically got two main styles. One's a systematic or algorithmic style, swing trading using swing chart. I think once you really get a good strategy, it's really personal. It does become really personal in the day because it does suit your temperament, what your risk profile is, what kind of leverage you're willing to use if you're using leverage at all. But with the systematic style of trading, that's really the bread and butter where you can get a decent algorithm, have your position sizing strategy, and then that just churns out. You get the signal, you pull the trigger, get the signal, pull the trigger. For altcoins, I really like the mixing a bit of Wyckoff analysis with Gann analysis, and you can get some really good big picture plays put together in terms of, sideways periods, accumulation. And for that style of trading, it's not necessary to need leverage, which I think would make a lot more people comfortable with not having to use leverage because the moves are just so big in crypto.
Yeah.
But I mean, they're my main go-tos, like a systematic, purely rules-based, so there's no discretion whatsoever. And then the other part of my trading is more setup-based, which is what my YouTube channel is about, looking for setups come together, technical indicators of macro support, breakouts, that kind of thing. And as the market is churning, it is really a matter of doing the same thing, but just on a smaller time frame to get those moves because the moves aren't lasting very long for the majority of the market.
Yeah, and it's so true as well. Having a system is key. Removing emotion from decision making is key. And a lot of people get that. They tend to follow trends, but by the time you follow a trend, it's already expired and you're left high and dry. So you got to be in there early. Do you have any tools to identify something before it's going to pop? Is that how the Gantt works in with the Wyckoff?
Wyckoff is really, really good for that in terms of seeing exhaust moves. I mean, nothing's perfect. There have been some really good short-term exhaust moves, but you have to remember the bigger picture trend and that kind of thing. So Wyckoff is kind of my scalpel in the market to identify potential areas of reversals. And I mean, when I talk about it on YouTube, trying to get ahead of the curve, people often don't like it because the market might be rising and say, hey, look out for this danger signal, just something that's popping up. But yeah, that really is, in my opinion, one of the best scalpels in the market is reading the volume analysis.
Awesome. Jason, how about you?
I tend to trade similar to Michael, but on a larger term time frame. So I guess people would look at Michael like potentially day trading, although it's not, but it's leverage trading. So he focuses very specifically on leverage, whereas because the swings are so big in crypto, I found that it was just easier to wait for the long, like the campaigns to build up. So the Gann referred to basically cycles in the market as a campaign. So you see the accumulation, which is what Wyckoff talks about, where you got those trending markets, which is what I think we're in now for Bitcoin and potentially some cryptos, where they start a trading range, and that potentially is the accumulation. And so then I'll wait for the campaign to begin, the kickoff, and then that move is usually quite significant, especially in crypto, which is why I tend to stay in crypto because they're like penny stocks. I don't think many of them are going to last. And then I'll just trade that entire campaign. I can wait for the peak and then start to see it roll over, give all those confirmations because the guts of it is so big that there's a lot in it. It's just about patience, and the campaigns can take 2 years, 3 years, 4 years. It's just patience for me.
Good. Excellent. Thank you both for that insight. Now, we are going to, before we do some open Q&A to the audience, because a lot of people have a lot of questions for you, we'll talk a bit about macro and where we are. So I put together kind of a quick summary as to what I see in the macro environment. Half is good, half is bad. Let me walk through my list. And a lot of people also complain, it's like, oh, well, your macro is very US-centric. No, I look at it globally. And sometimes a lot of things are actually following what happens in the US with the Fed. Any country that prints a lot of fiat is all in the same boat. Everybody's suffering from inflation. Real estate markets all over the world are doing the same thing right now. Credit's tightening. That's just impacting everything. So let's look at a couple of these real quick. I'll jump on this one. So first of all, the good news. I believe we are beyond peak inflation. I believe the Fed funds rate will max out at 3.5%. I've got a whole thesis behind that. So we're no more than 75 basis points from a pivot, which is good. That is, then it'll be rocket boosters. But I think the market's trying to even front run that pivot. And Jerome Powell did have some very dovish statements last time he was up, I believed, at least reading between the lines. Now you got the S&P 500. We spoke about this at the beginning. We are right in the midway between the all-time high and the bottom. So the S&P 500 is up 12.5% in the last 30 days, and it's 12% from the all-time high. So the question is, could it make a new all-time high before the end of the year? Some people believe that's possible. Valuations have come down. There's $3 trillion of money on the sidelines waiting to be deployed from those people who aren't on the train. Bitcoin rally is above the 200-week moving average, a very important area, and copper is sold off. Now, the bad news, job numbers, even though they believe they're good, they're actually not. Demand destruction is in full swing all over the world. Housing markets toast, credit markets on a ledge. Very worried about the EU and Germany. The energy issue is a serious problem. Inventory overhang. GDP is negative in the US and will be negative in many other places too. And we have that inverted yield curve. So that's a very quick and dirty summary of how I see the macro. What do you guys see in your necks of the wood? Like Jason, you're in Greece right now. What's going on there? I know Greece had a lot of historic problems, but now it's Italy has all the problems. And Michael, what do you see domestically in Australia? Are people suffering? Is consumer confidence there? Are people curtailing their spending? Is the housing falling by 10%? Let us know what you think. And are we out of the woods? So, Michael, you first.
Yeah, you made the point there that the housing market's toast. I'm certainly not seeing that in Australia, certainly not Queensland as well, but all over Australia. I mean, we had pretty enormous growth, and now we're just seeing a slight correction. If you just think about a chart, we've gone up. We're setting up for a higher low, in my opinion. I did recently travel to far north Queensland, and almost everywhere I went, there was jobs wanted signs on the windows of cafes, restaurants, clothing stores. I think it's for everyone. It's really worthwhile just paying attention in your area and looking around to see signs instead of just listening to maybe the mainstream news, which can lead many people astray, in my opinion.
I agree.
Apart from, I think there is a slight pause on just waiting to see what happens. But at least from my demographic, my age, a lot of my friends and people I know are still looking to get into real estate. They want to buy. They've got more projects coming out of their ass than anything else in engineering and digital. Everything seems really, really bullish from the general standpoint. I know people are hurting with cost of goods going up, all of that kind of thing. But as far as I can tell, very macro bullish, because it does all come back to the land at the end of the day. And we haven't had a credit crisis based on land prices yet. We've had more so just interest rates going up, and that's just naturally flowing on into obviously the stock market that's pulled back. So I maybe didn't explain that as eloquently as I would have liked, but very bullish, big picture. Property market, at least here, is still holding up fine, apart from just a slight pullback. I mean, on a quarterly basis, my area is still up 0.1%. So it's just been a normal correction, in my opinion.
So mortgage rates haven't gone up in Australia? I thought they did.
Interest rates have gone up. Yep.
Yeah. That had no effect. I guess it's one of the studies I did a while ago, is about 2 months ago. It was the movement, the migration of the millionaires and billionaires from hotspots in the world like China, Russia, Ukraine, and where they're moving and where they're moving to. And I think Australia's top 3 country. So you have a lot of influx of big money coming to Australia. Also, Australia has heavy commodities, which has boosted the economy as well to a large extent. So that's a very interesting take about the real estate there. I thought maybe the increase in rates would have impacted, but maybe people are buying with cash. And if it's a cash buying market, mortgages don't matter. Jason, what do you see in the world from a macro perspective?
One thing you said earlier on with that your audience or some people see your work as being too US centric. I think that's the right way to go about things. I mean, I don't want to be like a right and a wrong here, but the US, biggest GDP in the world, they're running everything for now. Maybe China comes over, maybe they don't. But the US is the biggest place. It has the most money. If the most money is still pumping it into the economy, things are going to go up regardless of what happens in Greece, which is a no player on the GDP scale. the majority of the other countries are nothings when it comes to the GDP. So if anything happens to them, like I saw something with some comments come up about Sri Lanka, that whole country's just, government's imploded. They don't know what's going on. People are like, you don't know what's going on in Sri Lanka. I'm like, it doesn't, the people, I don't mean about the people, but it doesn't matter on the global scale because they don't have an impact when it comes to global trade like the US does and like China does. So all eyes should be on China, on US and China. It's like when we look at Bitcoin, like if Bitcoin's not moving, altcoins aren't really going to move that much. So it's the same thing. I think it's the wrong way to go about things, looking at all the little things that are going on elsewhere if you want to get a macro picture. But we're talking about the little things that are going on. I've gone through Italy now. I'm in Greece. Greece is one of my favorite places. I've come back every 3 years now for the last 6 years. I've been traveling to Thailand in this last 6 years as well, often on and off. Indonesia, they're the main places. And in Greece at the moment, it's the most buzzing I've ever seen it. I was here in 2019 and 2016. Now it's 2022. Some of the developments that are going on are absolutely wild. Their old airport that they ripped down, 20 years ago when they had the Olympic Games, they got the new airport. That whole thing is getting redeveloped. It's like the size of another whole city, and this is all sort of leading into the timing that we're looking at for around 2026 as a peak in those sort of markets. Around 2026, people often say it has to be 2026. We're looking for a peak around that point. But just as an example, talking to my Airbnb hosts who have property development companies, they're all sort of getting into the market. They are buying bits of land on different islands where their families are from. That's a real Greek thing. Families are from different islands and they all sort of go back to Athens to work and then they head back to the islands for the summer. They've got land that they're all buying. People are coming. Tourism is huge. And I'm like, what, recession? I don't know. I'm not seeing a lot of this with people. You did mention, and you had a great video, James, when it was about the millionaires moving, and you looked at where they're all moving to. And, I know it sort of sounds heartless at times, but you've got one millionaire or billionaire coming. They're going to be able to pump the market more than the million people who are on an average salary in Australia. If they wanted to buy several properties, it's a far more impact on the economy than it is with a few 100,000 people that are trying to buy the lower end of the property market. So I always take that into consideration as well. It's like the smart money, we talk about it with crypto. Why don't we look at it the same thing when it comes to the economy? But we're always stuck on the low end that might not be able to afford electricity come winter. It's two different ball games.
It is.
Yeah, I was gonna add on that. Sorry to cut you off. I think that makes the point perfectly, because it might seem like we're detached, and it's obviously there is a big class of people that are struggling and doing it tough with prices going up. But as we do head on towards this peak that we are talking about, it is the institutional involvement and the big money that is going to keep spurring the cycle on and going to keep get this next leg of the bull market really intact. So I think that's where the money is going to be flowing from. And, we've got banks creating credit still. We could see, I think it was in the UK where they're easing criteria. So all the things are getting more expensive. They're still making it, interest rates are going up. They're still making it easier to get a loan. So there's all of these things going on that is going to keep moving this cycle along, which is why it's still macro bullish into later this decade.
Good to hear. And also regarding two things, just to hammer in, because you're both giving very interesting perspectives. Number one, I believe C19 changed everything. It brought 20 years of change ahead and packed into 700 days. And number two, the help wanted signs, we see them here too. But the great resignation is a real thing. And people are fed up doing the 9-to-5 humdrum job. They want to do something different, kind of like the way you pivoted from your Sparky job to, I think you called it a Sparky job, to what you do now. So this is a super interesting perspective. Now, some questions coming in from the audience, which is the fun part. So Crypto Poppy says, what do you see as far as a signal before you go all in and know that a bull market is underway? So do you guys have cash on the sidelines, or are you fully deployed? And if you're not fully deployed, what is your signal? Michael.
Yep. So I got fairly heavily deployed at the June low, but in terms of the next signal, I want to be seeing a macro higher low, so or a double bottom, something like that. on the weekly or monthly chart. So we know where the low is now, 17.5K for Bitcoin, so 800 and something bucks for Ethereum. It is a game of patience for me to see a correction, where the correction does come to on a macro timescale, and then getting set there. Even if it's a higher price from the actual low, that's completely okay, because we don't know what the actual low is at the exact time. So yeah, it is really a macro high low.
So what happens if we keep creeping up?
That's just going to be, we're going to get a higher low eventually, and where that higher low comes is just going to be dependent. There's always going to be a correction. Just like from the top down at 69K, I thought we were going to get a lower high closer to the top. We didn't get it. That's just the nature of the markets. That macro lower high didn't come in until just under 50 grand, which is where I sold a chunk of my portfolio as well. So it's just that game. We don't know. We're going to get a high low eventually, and we have to see where it comes.
Jason, what signal are you looking for that the bull market is truly underway?
It's similar to what Michael said there, and I mentioned it early in the stream, so not to repeat it too much, was basically, depending on where we peak out next, that higher low. And I know it sounds, what is that? It's too vague. Where is it? It's honestly, we have to wait for the market to tell us where that is, but we'll see the signal. And the way I talk about it is that it is a premium to pay for the confirmation that the market is going to turn. So the higher low on a macro scale is what I'm looking for. That's the premium I'm willing to pay to give me the signal that we're going to take off. That's for Bitcoin and S&P and the major ones. As for altcoins, I honestly don't really care about where they're sort of jumping and churning to. I just want to see a macro breakout. And I'm like, that's it. I'm on. Let's get in on the altcoin season, make some money, get out of them, and move on again. I don't need to get the exact bottom or the exact top.
Excellent. So next question is from I Am AI. Do you all agree on the 18-year cycle theory? So
yes.
Maybe give, for the audience that don't know what that is, give them 20 seconds. And does it only refer to property? Jason.
The 18.6-year cycle, that's what we're talking about here, like the economic real estate cycle.
Yep.
That basically, on average, over the last 220 odd years, on average, doesn't have to mean it has to repeat exactly the same. It's approximately 14 years up, 4 years down. And so within that 14 years, we have a mid-cycle correction. And that's basically what we've gone through over the last 2 or so years, with COVID being the reason for the mid-cycle correction. There's always a reason for a mid-cycle correction. It happens every single time, almost at clockwork, and it's something else that has popped up. It sounds crazy to believe, but now I've seen it for my second time round, and it just continues to happen. And I've read the history of the 220 years of it. Happens every single time. Then we head up to that last stage of the cycle, the 18.6 year. Just to make a note, it's between 17 and 23 years, with the average being about 18.6. The only time it hasn't happened is with a world war, and we're not in a world war period just yet. We will get to those, but this isn't the world war just yet. And so that's what leads us into that final stage. Everyone's into it. Market rolls over. We go for a few years down.
Good. Michael, do you agree with the 18-year cycle theory? I think you do, because you through osmosis from your brother.
No, I also studied it myself, and when we see it happening time and again, it's just uncanny how it works out. Before COVID, anyone knew what COVID was. We were looking out for a peak in the stock market and a recession. We didn't know what was going to be the catalyst. And then sure enough, first couple of months of 2020, we get the catalyst, the market dumps. It just happens over and over again. Just like in January, we're talking about the 2020 aside, we're talking about the low of the decade coming up this year. This was in January. We're saying looking out for late Q2, maybe early Q3. That's why I'm more bullish basically than ever, because it's been late Q2. We've had a low. Perhaps this is that low that we've been looking out for. So, I mean, long story short, yes, I'm a subscriber to the 18.6 years.
And in terms of, that's specifically referring to property market. That's the one I understand, not the stock market, correct?
It all intertwines. It's all about the credit creation, credit cycle, where the money is flowing to and from, and that's everything is all kind of linked together in one way or another in the financial market. So
it's like, where does all the money flow back? If you think about it for altcoins, just quickly, Bitcoin and altcoins, we see those altcoin pumps. We've seen Ethereum runs last, and then the altcoins start to pump, and then where does the money flow back to? It all ends up going back to Bitcoin. Even if they're all dropping, it sort of flows to Bitcoin, flows to stable coins, flows back to fiat. And then eventually, as this thing pumps up and up and up and up, it flows into, goes into the 18 cycle, flows into real estate values. And the same thing happens in the stock market, pumps, money flows out, real estate, then everything has to come down together at some point.
Okay, so what I've been looking at is kind of interesting, because I look at a thing called the Case-Shiller. Been looking at it for more than 30 years. It's nearly 100 years old. And that tracks different types of real estate. And I always believed in kind of what I call a 7 to 9 year cycle. So, which is very funny, because if you take that and you double it, you get your 18 years.
Exactly.
That perspective kind of happens. But I think they're very discrete. And I believe that real estate lags the stock market by about 6 months. So the stock market crashes, say, June 1st. December 1st, real estate will crash. That'll be the kind of peak or bottom. And also the recovery time for real estate is slower, because it takes a lot longer for price action to happen and things like that. Mm-hmm. And also it's very much a function of, at least in the US, everybody borrows to buy in most cases. So it's very credit sensitive. So you have to look at those different factors. But there are times when real estate can suck. And again, C19 changes everything. It also, I think it was April 2020, real estate went up, especially not commercial real estate, but residential real estate. People wanted bigger homes. And since then, it's been going gangbusters up until the slowdown about 2.5 months ago. So that's kind of just how I view the world. So we're all kind of aligned. I am AI.
It all ties in.
The next question from Jimmy God. Jason Pizzino, you stated a few times that Sol has a high chance of being this cycle's Neo. Why? Oh, I love this one.
I said it has a high chance of being EOS too. So
yeah. Good. So you think Sol is dead?
I think it has a high chance, because it hasn't proven itself yet. There's been a lot of failures with it at the moment, and the price is still going down. I'm waiting to see where this higher low forms, and then of course, like you said, check the ETH chart and also check the BTC chart. So it has the potential, because I remember the market sentiment, the craze, the maximalism that comes around particular tokens in a particular cycle. Neo had it, EOS had it, Sol had it, Cardano had it. It's like, is it going to continue on, or is it going to break out and become an Ethereum? That still, to me, is yet to be decided. And I'm not ruling it out, but I like to say that just to remind people that not to become maximalist about anything. Otherwise, you're basically just throwing your money away.
Yeah, of course. Now, one of the things that I look at is just metrics and data and deep dive into technology, but you cannot deny let me get this right in my head, Solana processes more transactions than all other blockchains combined, number one. And I know that excludes voting transactions. Number two, it has more daily active users than any other chain. So, but it trades at less than a 15th of the market cap of Ethereum, and it processes a lot more. So not necessarily transaction aggregate value, but it is, at least from what I see compared to other chains, it definitely is used. And I always look at the analogy of kind of a chain being like a shopping mall. What's inside? Would you like the dApps? How much foot traffic does it get? How much do they spend? How long are they there? That's the way I value things, like a caveman. And from that perspective, it is no EOS. Anyway, Michael,
I definitely think you could be right. Like, it could be a very, very good token. The point I often make about it is just don't become maximalist. Like, we've seen what happened with Cardano. Cardano holders. I said I only had Bitcoin and ETH, but I do have a little bit of Cardano for the staking pool. So I lie. There's a little bit sitting there, right? But
Charles is watching. He's very happy, by the way. He gives you a big thumbs up. Charles Hoskinson. He's very proud of you.
Thanks, Charles. I've done a few impersonations of him over the year on the channel, but essentially it's just, you become maximalist about anything, and we see it all the time on Twitter, on YouTube, that people just sort of gathering around as a community like a tribal fool. It's like you've just given all of your power away, and you just blindsided yourself to being an investor full time. Like, do you want to do that? that's your choice. But I'm just trying to say, don't do it.
And again, I always say to people, keep your tap dancing shoes on, because if at any stage the thesis changes in any investment, you bounce. And never have all your eggs in one basket. But despite that, I'm very heavily concentrated in things like Tesla and Bitcoin, for whatever it's worth. And I do own 3 cryptos right now. The third is Solana. It's about 5% of my bag, or 4% because it's gone down. But very happy I own Tesla, because that's kind of saved the year so far. Anyhow, that was from Jimmy God, so good thing you spoke about religion. One last point, actually, and that's Michael, you got something to add. Sam Bankman-Fried, self-made man, richest man on earth, under 30. He thinks it is the most underrated, undervalued crypto out there. So would you bet against Sam Bankman-Fried, Michael?
I'll be no reason not to. I mean, we can see what some of the, I guess, big wigs, they also make bad decisions. I'm not saying it's a bad call or anything like that, but I don't think we need to be putting anyone on a pedestal and just blindly doing what anyone else says at the end of the day.
Oh, no, I made my decision about 16, 17 months before he said that last week. So
yeah, fair enough.
I guess not on a pedestal, but it is pretty impressive what he has done. So,
sorry, you're referring to Solana, right? One of the most underrated. Yeah. I mean, from a technicals, looking at the data, I'll just go back to the chart. It looks like it is in a accumulation zone. Any price above $36 is holding in a relatively strong position, and there's a lot of open ground up to $80. So not a buy recommendation in the least in any stretch of the imagination, but from a technical standpoint, it's sitting in a decent accumulation zone, and if we can get another breakout, there is a lot of open ground up to around $80. But I think for alts, like I said, I'm not one that researches all of the details and fundamentals, but just looking at history, it seems like there's almost 100% certainty that almost all alts will have a 90% drawdown. So when I'm just thinking about portfolio, that kind of thing, I'd just always be having an extra strategy for whatever alt that I'm holding, if it is for a macro play or obviously short-term play is another story. So that's kind of my approach.
You pointed out that 80 level, because I see that as resistance on my chart. So you're dead right. Nice point of view. I love it. And no matter...
Solana hit my bottom target already. It got into the $20. That's what I was saying earlier on when I dumped it all and people were really pissed off. I'm like, look, it has the potential to go to $20. Made it to 20. What did it make it to? 25, 24?
I think. Yeah.
Yeah. So there it is. Anyway.
Cool. I've got a question from Danny C. Concerns with another crash to wash out excess debt? Do you believe there's another shoe to drop? Another black swan? Another contagion event? From Danny C. Or is all the liquidity flushed out? Michael, to you first.
I haven't, same with crypto, talking about maybe we could see another 30 to 50% drop from whatever peak we do get, an intermediate top that is going to be coming up eventually over the coming, maybe now or coming weeks or something like that. I do think we could have some kind of shock event happen later this quarter, maybe early quarter 4, that does flush a lot of people out of the market. So what that event is, I don't really know, but I think we could still have some kind of liquidation event before the market gets going for this current down leg from the bear market we've been seeing this year. Great.
Excellent stuff. Jason, any point of view on that? Any more shoes to drop?
No, I agree. I know it's kind of a bit lame that both of us are agreeing on one, but we are brothers and we do look at similar analysis. But the main thing is I do think there is something else coming the end of this year. It doesn't have to be anything like a Corona dump or, a Luna UST sort of dump event. But I still think there is there's still like an imbalance between people who are greedy and fearful, and we just haven't flushed out enough of them yet just to get a nice clean slate. And then we just take off. We don't boom, but we start to climb, and we've built that foundation, and we're ready to go for 2023, 2024. That's what I'm looking for next.
Yeah, and Danny C, my point of view is I think all liquidity is flushed out. I think everybody's just waiting on the Fed. Once the Fed pivots or slows down, it's rockets on. $3 trillion will hit the markets, and we'll hit a new all-time high. At the very latest, Q1 2023. Just my take, and we're so close already.
You think an all-time high in Q1 2023?
At the very latest for S&P 500.
Latest.
Yeah.
Oh, for the S&P.
Okay.
I thought you were saying for Bitcoin. I'm like, wow.
Yeah.
All right, James. I think you've lost your marbles.
The other point is Bitcoin could be the first asset to take off once we go risk on, like full risk on. Risk on is already happening. The macro bottom was in. People realized 4 months ago or 4 weeks ago. But when you look at the big money, like the really, really smart Wall Street capital allocators, they are already taking action. If you get all your information from FinTwit, you'll think the world is ending tomorrow. So we have some really funny people in this community. This is from Ryan VEGN Tech. And he's a little bit stuck right now and hoping you guys have some good advice for him. He said, I already printed Peter Schiff's face on my pillow, but how much Cardano do I need to get a proper girlfriend? Jason, this is your third biggest bag. Go.
Doesn't matter how much Cardano you get. It's not going to happen. I'm sorry.
No hope? Even a million ADA?
No, I mean, look at Charles. He has all the ADA and he can only get an eagle on his arm,
He does have a Black Hawk helicopter as well, so that's pretty impressive.
He can't bring that to bed, though.
Yeah, well, I wouldn't mind a ride in that thing, as long as he's not driving or flying the thing.
You want to ride, Charles? Okay, sorry, I misheard you.
It's Black Hawk helicopter. I wouldn't mind a ride.
Oh, yeah, sorry. It was the internet here in Greece. My bad.
Yeah. So, Michael, any level of Cardano you need to get a proper girlfriend, as Ryan says?
I don't even know how to answer that one.
It's relationship advice. It's what you give. Come on.
We're both married.
I don't know. I'd probably say not.
So you guys are off the market then in that case. So cool. So next one is from Jabba. Hey, buddy, let's smash the likes for the best crypto channel in the crypto space. Thank you, Java. And of course, everybody, we're giving away free subscriptions to the Pizzino channels downstairs. So make sure you hit that too. And from Stephen Chickering, thank you guys for all the info. Really appreciate it. And thank you as well to Jeff Hammer, St. Jude Nidas, and Cal. Appreciate you, everybody. And Chadwick as well. So really good shows. People love to hear your different points of view. One final question from me, because... and I know it's on people's minds, is how do they pivot their career? Michael, final question for you. Any advice you would give somebody who is in a career that they didn't like? Maybe you mentioned Sparky being an electrician. Did you not like it or felt you could make more money by doing what you're doing now? And how did you pivot? Especially with family commitments and everything.
Yeah, so this was going back a decade now. I went into being an electrician knowing that I didn't want to do this forever. I just didn't know what else I wanted to do. Didn't want to go to university, so it seemed like the next best thing. Really glad that I did it, but I was studying throughout that period. But to make the pivot, I think the best advice I can probably give is make sure you have at least a 6 to 12 month buffer of savings that you will not touch. That's not for trading capital or anything like that. That's so you can live your exact same lifestyle. You don't want to compromise your lifestyle. So have that put aside, then have your trading account put aside, and then have a contingency account put aside. So I think just having a backlog of money there so you can actually trade, assuming you've actually tested a system and you got a track record of 3 months of consistent profitability. I think from that point there, make the transition, and you're not trading with scared money. I think that's a really important thing. If you're trading with scared money, you're not going to be trading properly. Your emotions are going to be getting involved. So a few things there: have a backlog of cash, keep your lifestyle going. Have a proven track record of at least 3 months that you've proven to yourself you can do this thing, and then have your trading capital and account and give it a go. If you can defer your job for 1 year or something, so you have that peace of mind, even if you've got no intention of going back, you can just have that. It's all about getting your headspace in the right place and putting yourself in the best position possible mentally to make it work.
It's so important. I always say, apart from the 2 Ds that we mentioned at the very beginning of the video, what are they again? Discipline, dedication. So that's also very important. So you were very disciplined and very dedicated.
I felt like I was getting taught to by my dad here. I like that.
It's you guys. But this is just so helpful.
That's
people
good,
like I decided during, when COVID kicked off, it's just like, okay, I'm not going to go back to the workforce. I'm going to retire. And, what was the point? I won't talk about the story of one day at work.
I haven't heard about this, but I don't know. People don't
Yeah.
mind.
Me either, but yeah.
Give us the 30-second. I've never heard it.
Yeah. So, well, I was all in cash. And I was waiting for something big to hit. I thought there'd be some type of financial crisis at the end of 2019, so I moved to cash. I tend to move to cash at the end of the years anyway and wait for a fresh start. But also, I had a friend who had a sister in Wuhan, and I started hearing all this stuff in December 2019. I started doing mind maps and researching and spending all my time in Johns Hopkins University and putting all this stuff together. It's like, oh my God, this is bad. This is really bad. So I was just waiting for that moment for the markets to capitulate. And then I just deployed and, really, really risky stuff like synthetic longs and tons of naked puts and everything else. And then they just all exploded in value. So that was it. But it just shows the importance of being on top of kind of macro trends and being positioned before the proverbial hits the fan, if you guys know that expression in Australia. And that's the big lesson here as well. And also, I think a lot of people got a lot from you, Michael, about your pivot. It was really good advice of having a year, but also the most important advice is having the right mind space, because I found as well, if you find something you love doing, it becomes a hobby. It's not a job. And I think that's also a key piece of advice. Do you believe what you do now is like a hobby, or is it actual nose grind, tough work?
Oh, definitely not grind, tough work. I enjoy what I do, so it doesn't feel like when I get up, it's not like it's a drag. I mean, I wouldn't really call it a hobby, because I think most people don't make money from their hobbies, and I make money from what I do. So, but it doesn't feel like a job, to put it that way.
Mm-hmm.
Awesome.
Yeah, definitely doesn't feel like a 9 to 5. Doesn't feel like anything else I had before. It's just you want to do it, even if things aren't going too right. You want to figure it out and work with it. And the only thing I'd add to Michael's savings is for me, it was just get in the mind space that you want something different in life. I didn't know what the hell it was that I wanted. I just knew I wanted something different. I did not want university. I did not want a job career forever. So that was one thing I was certain on. I just didn't want that norm. That was it.
Fabulous, guys. I hope people appreciate we had nearly 3,000 people watching live. So thank you, everybody. Don't forget to subscribe to their channels. Big thank you to Jason and Michael. Jason, thank you for dialing in the evening in Greece. And Michael, thanks for getting up at 4:30 in the morning to do this.
Thanks for having me on.
Thank you, James.
Appreciate you both, guys. It's been great. So much learnings from you both. So see you all soon, everybody.
Likewise. Thanks, everyone. Thanks, James.
Bye.
Thanks, Mick.